Netflix earnings analysis follow-up. In this video, I'm going to go over 1, the mistakes I made in my previous Netflix earnings analysis, 2, how they performed this quarter compared to their estimates, and 3, I'm going to be looking at quarter 2 estimates and what I'll expect from Netflix this year. I made 3 mistakes in my previous video. First, I didn't realize net additions to membership had such a high effect on the stock price, more so than their profit and earnings per share. Second, I didn't realize that their guidance for net additions to membership was way higher than average because I didn't look at that historical data. And third, I didn't realize how the seasonality affects each quarter. Because each quarter has different member net acquisition and different content, this affects the overall guidance of each quarter, which I did not look at. Let's get into Netflix's quarter 1 2017 report. Now, their numbers are: revenue beats by more than 100 million, operating income beats by more than 100 million, their net income beats 3 times over at 178 million compared to their 67 million estimate, and their earnings per share beats at 40 cents compared to their 37-cent estimate. What do I think about these numbers? Their profits beat, and this is really great seeing because this is what I thought would happen in my previous analysis. And also managing their operating income to increase by 100 million seemed really great because they're also expanding, and increasing the operating income while they're expanding is going to increase how they manage their new investments into original content. Onto paid memberships and total memberships. This is Netflix's problem right now. Their total memberships missed. So they estimated 99 million memberships, but they only have 98.75. Also, their net additions was estimated to be 5.2 million, and it's only at 4.95 million. This caused the stock to drop immediately after the report was released. They dropped 4%, and they've rebounded now. But this showed me that missing on their memberships had a higher effect than beating on their profits. And this is one of the mistakes I made in my previous videos, is I did not take into account how much net additions to membership had an effect on their stock price and their net income. And then we can also see the profit in international streaming is 3 times what they estimated it to be. They estimated 16 million profit in international streaming, and it was 43 million. So that was great seeing, but again, they beat on all their profits, which didn't have as high of effect as their memberships. And if they beat on their memberships, I feel like this would have brought the stock price up way higher than what it is at now. Going on, we can see that quarter 1 and quarter 2 forecast is showing that they plan to have operating margins at about 7% for this year. In quarter 1, they forecasted 9.7% and 4.4% in quarter 2. And so they're just trying to get that average, which I don't think they're going to be focusing on having that high of a operating margin. And, I don't like seeing that unless they can have higher net additions to membership. If they grow their membership by a lot and they have low operating margins, then that's positive. But if they increase their operating margins and not their net additions to membership, that's not a positive, just because members are more valuable. The next section is marketing, and this is what I really like seeing. They're spending over $1 billion in 2017 to drive member acquisition. And like I said before, driving member acquisition is more important than profit right now, because having high members is what really affects the Netflix stock price. And so that's what I want to see. And I feel like because of that $1 billion they're spending in 2017, they're going to start beating their net additions to membership, which they failed to do this quarter. Free cash flow has been getting a lot of slacks from analysts because it's been negative for the past year. It says here that they plan to be around $2 billion negative in free cash flow this year. So this I'm not too worried about, just because that's reinvesting into new content, and that new content is going to drive member acquisition, which is the most important part. The last thing I want to go over is just their overall revenue numbers. Now, they increased their revenue by 160 million, while their cost of revenue only increased by 3 million. And that's just amazing to see, because that cost of revenue is taking a chunk of their revenue out, and if they keep that pretty steadily managed, then that's going to increase their operating income, which is what they're trying to do. And they're looking at a 7% operating income for the year. Okay, last one. We have additions to streaming content assets, which is what I looked at into my previous video. This quarter, they added 2.3 billion in streaming content assets. So this is up since their last quarter, which is a lot. And but also their net income has increased, which increased their earnings per share, which is good for me as an investor. So personally, I like seeing this because they've driven their profits up, and also the additions to streaming content assets is going to drive member acquisition, which is what I'm also looking for, because that has a direct correlation to the revenue they get. That's my analysis for quarter one. It looks like they have some good numbers for profit, but they need to work on that member acquisition a little more. Now I'm going to go into quarter two. So quarter two estimates are much lower guided than quarter one. It looks like their operating income is going down to 120 million. Their net income is going down to 66 million, and their earnings per share also is going down because of that. And as an investor, I don't like seeing that because they're not making me money. And I wouldn't be worried about that profit and net income if their net additions was actually greater. But it looks like their net additions for quarter two is lower than quarter one, 3.2 million. And that I don't like seeing. I don't think the stock price is going to go much higher just because of this lower guidance. Another negative for quarter two is that their contribution profit is back to negative again, which in the previous video, I talked about it going to be positive for this next year. However, in quarter two, it's going to be negative 28 million. I don't like seeing that because their net additions isn't increasing at all, and they're still going down in profit. It looks like quarter two, they are hitting the 50 million total memberships international streaming, which is a good milestone, and they're also hitting the 100 million total memberships milestone, which is also great to see. To conclude, it looks like quarter one, profits increased, their membership did not increase. Quarter two, they have a really lower guidance for both operating income, net income, and international streaming profit. They also have lower guidance for total memberships. That's my analysis for Netflix's quarter one and quarter two. If you like stock market videos, financial education, and stock education, then please like this video and subscribe.